Welcome back, everyone, to the Relay Bitcoin podcast. Today, we are going for a deep dive, and we have quite an exciting guest here in Patrick Heusser. You are the head of lending at Sentora, and I'm interested to know, Patrick, how has your day been so far?
First of all, thanks for having me, Joël. And the day is quite exciting as Sentora is growing super fast. So it's almost impossible to catch up with the daily new projects that are coming in. But it's good. It's good excitement. It's positive stress.
Perfect. And I always find it ironic if two Swiss guys are sitting in a call and we don't have to speak our mother tongue. But I think for reach-wise and that everyone understands the topic at hand today, we'll stick to English. Because I said it already, it's going to be a deep dive. We are going to look at Bitcoin Treasury companies today. And we're really starting from A to Z and giving the whole spiel. But before we go into the nitty-gritty, Patrick, how did you approach this new, I would call it phenomena, especially in the last 12 months, when suddenly this interest in treasury companies and in advanced models to actually acquire Bitcoin started taking shape?
I think I need to start very early, like when Michael Saylor started to accumulate Bitcoins on his balance sheet for the company then called MicroStrategy. Um, and his presentations he did around the globe about, and he called it New Digital Capital. And for me, that was sort of the spark that I think he's doing something different than just adding Bitcoin and hoping prices go up and up forever. And we probably get to that later on in the conversation, but that was sort of the beginning. And then I followed the space quite closely. Now we are in the phase where imposters or copycats are coming in, and Bitcoin is not the only reserve asset that is being played with. We go from ETH to Solana, and we go even further down to proper shit tokens where, in my opinion, the reasoning of doing it is completely different than what Saylor is doing.
Yeah, I recently found out like Multicoin Capital, which was, I think, when everything blew up in like the CeFi world, was sort of like one of the main boys. They're now like the Solana Treasury company, apparently. I call like, oh wow, interesting. Based on their track record, which again is a lot in finance, you wouldn't be too bullish on that works out. But we'll leave the shitcoins out of this discussion. Let's start with strategy, or formerly MicroStrategy, as you said it. Why was it so revolutionary that Saylor came onto the scene in, I think it was August 2020, and said like, hey guys, we're buying Bitcoin for our balance sheet?
I think at the very beginning, it wasn't that revolutionary because we had Tesla already adding even Dogecoin to their balance sheet at that time. And we even had a few other larger IT companies thinking about it. It went to the board. Some of them said, no, we don't want to. So it was like, but at least he was one of the first that said, we're going to do this and we're going to do this in size. And then the machine kind of started. When he made his presentations, and he always mentioned, I'm an engineer. I'm not a financial guy. So what I'm doing is I'm engineering my balance sheet. And at the beginning, I was like, yeah, whatever. I mean, engineering, it's like it's structured products. But when listening to him over and over again, and he's repeating this every time when he speaks, he's really just focusing on what instruments can I create to get more fiat to buy Bitcoin, and nothing else. It's actually the flow is that simple, but the engineering on the balance sheet got really interesting. Maybe about a year ago or a little longer when he started this preferred share programs, Stark, Storm, Starf, or whatever the names are of these preferred shares, where he's trying to mimic other financial products that have similar risk profiles, like a money market fund or like a mezzanine financing, and so on and so forth. And this is where, again, I saw it. Okay, this is financial engineering. He really tries to build products that, under the hood, look like financial structure products, but they all serve the same purpose: buy more Bitcoin.
Yeah, and I think what was really big was when he announced I think at first it was the 42 billion plan, like 21 billion in equities, 21 billion in debt through obligations and stuff. And now they're expanding. And I think this was sort of the key moment where then other companies started taking notice and went like, oh, so it's not just having excess cash, for example, or reevaluating your gold stock on the balance sheet, selling it and buying Bitcoin with it. There is really a financial model behind this all. But without going into the details, because I know there is a lot of ways of what Strategy is offering now, how would you describe to someone who's a layman at what the different offerings are for Strategy on how to get more fiat and buy Bitcoin, and who is it roughly suited for?
I would break it down into the equity part. So common shares at the money, share selling for the common equity investor. Then the preferred shares that he's trying to mirror money market instruments. So from a yield perspective, and some of these instruments try to have a constant yield. So you have a bit like a money market deposit where you get, at the moment, I think it's 9%, give or take, on some of them for a shorter time period, up to like a 1 year time span. So you try to move some money out of the very conservative TradFi clientele into still, I would say, not so risky, but risk adjusted to 9% yield sort of investors. And then you have the hedge fund play, which is mainly driven by his convertible bond schemes to get more capital for buying Bitcoin, even though I would say the for him, but also for the general market, adding more debt to the balance sheet to buy Bitcoin is, I mean, that has limits because he doesn't want to be leveraged, as he is not at the moment. But other companies just issue debt and buy Bitcoin. That is probably the worst trade you can have as a construction on your balance sheet. And then he has some sort of an in-between product that is for fixed income users. It's also a preferred share program that goes to the 3 to 5 year sector. Also fairly high yield, but he's also trying to risk adjust it in the when you look at the waterfall concept. So when the company would go under, where you are in terms of getting served by the process. So he's just trying to pick on the risk spectrum investors for each let's call it for each sector, from low risk to high risk. And I think that makes sense because you want to have a wide investor base, because if the shit hits the fan, if everything is retail capital, then you will be in trouble.
Yeah, and I think there was also some criticism from, if I'm not mistaken, certain Strategy shareholders who went like, oh, in your 42 billion plan, you burned way too quickly through the debt plan, the 21 billion in debt. So you were issuing these bonds like crazy. And then with the ATM offerings, you're now a little bit slower. But I think through your explanation, it's also visible that it's not the same type of investor you're speaking to. They have different processes in the background, different risk profiles, as you mentioned. And through that, you obviously somehow also play the market a bit, I would say. If he sees the opportunity, I think they really started hitting the gas right after the election in November. And he basically burned through the 21 billion in almost like, what was it, like 5 weeks or something?
Pretty quick.
And on the other hand, he obviously has more wiggle room, I would say. to then go after these funds or go after these type of investors. But nevertheless, you still see also interest by, of course, retail investors who then go into these products. Do you see this as just a current phase that the whole accumulation of strategy is in? So retail investors will also look at this and go like, well, it's done good in the past. Why shouldn't we get our feet in? Or are those just the super risky strategy degens, I will call them on X, that go like, yeah, I want to support the company and for that matter also the playbook?
To be honest, I I really cannot see that this product is suitable for retail. Just because it's very complex. Even if you look at his common share program, it's to understand what the company does because it's not a SaaS company anymore. It is a Bitcoin Treasury balance sheet engineer company. So you would need to look very in detail how he structures equity and debt and the Bitcoins. So to me, it's like it's a shiny thing, and retail always goes after the shiny stuff. So they're in, but they're in on their own risk, and it's even traded on a regulated stock exchange, and you get access to it through your bank, and the bank is vetting it as a suitable investment for you as a retail guy. So there you have it, but it's always at your own risk. What I think is more important, and then as you mentioned it, this is kind of the second phase now. More important is the third phase. What is his end game? And he mentioned it very clearly. He doesn't want to own more than 10% of the total floating supply, which makes a lot of sense from a trader point of view. You never want to be bigger than 10% of a market because it's going to be very difficult to navigate if your position is bigger than that. So that point number one, that number makes sense. But point number two is, so what do you do then? Because then you're stopping your machine of just buying Bitcoin. You're at 10%. And it's not 10% in dollar terms, it's 10% in Bitcoin terms. You will not buy more. So you need to have a plan that you use that digital capital to yield in something. And this is what my report also points out. I don't see it yet very clearly what that third phase will be or could be. But I'm reading a lot of articles about visions of maybe these Bitcoin treasury companies that actually made it through the second phase and have a strong balance sheet. They should become Bitcoin banks. And I remember this from Hall Finney, that he was actually mentioned this years ago, that he sees in Bitcoin a potential that this could be the capital for a fully funded bank that just owns Bitcoin as their core capital. And maybe we're actually going into this direction now, and hopefully see some of these companies transforming into a financial company.
Before we go into the second company, I think which we also have to talk about in the Treasury playbook, you mentioning banks actually also brought an idea in my head. We now saw, they're smaller Bitcoin Treasury companies. We saw this merger slash acquisition slash, yeah, we'll combine our power together between Semler and Strive. Would you also see a future where if the path is clear for the third phase, as you described, strategy suddenly coming in and saying like, hey guys, we have excess cash or we can raise another couple of rounds and we would be interested in acquiring, I'm now just spitballing here, this merger with like 12K Bitcoin, which they're going to have, or this company and that company. Could it also be that the amount of treasury companies in the end, and I'm talking about the big ones, become more centralized in a way, become that one unity thing, and from there on out the banks would start? Or is this a little bit too much with the tinfoil hat on my head now?
I don't think it's too much because I believe we're at the verge of something new, like a breakdown of an old system, and something new is coming up. So I don't think you can have enough fantasy into it. Interesting is though, at a Bitcoin gathering in Zurich, I was discussing it with a colleague there. He was more coming from the jurisdiction side. His point is, do you think there needs to be several Bitcoin treasury companies in the same jurisdiction? Or does it actually make sense to say, well, it makes sense to have one in the US? Strategy already has that spot done, but you might need one in Europe or even a little more local, one in Germany, one in France, one in Italy, one in Switzerland. And then maybe in Asia. His point is every jurisdiction is slightly different in terms of how you can raise money. Investor base is different, and the way certain things work in terms of running a digital asset treasury company. Now, if this is materializing, and we do see those winners within different jurisdictions, and they all transform into a financial institution or into a bank, I think then you have the world capital base in maybe two handful of players that accumulated the large size of floating Bitcoins under their balance sheet. Hopefully by then the price is way higher than it is right now. So you have a real big number in fiat terms, what their capital base is. And then I see those products that yield with their capital base being financial products, being lending out, not the Bitcoin, but lending out capital to other firms, yielding in Bitcoin back, or raising debt in fiat terms against your Bitcoin capital, and then using those raised fiat amounts to give out credit to your customer base that needs fiat, and so on and so forth. So I think it's a plausible third phase fantasy.
Definitely, and I think I could already see if like a critic sees it, it goes like, oh, it becomes centralized and everything, but they then don't understand that the underlying asset in itself is a different ballgame than what we've seen with, let's say, gold, for example. But we started with strategy. So Saylor realized in early 2020, pandemic, shit will hit the fan with inflation. I'll need an asset that protects me against this, finds Bitcoin, starts buying it, starts engineering these financial models. And then suddenly that moment dropped also in other companies. And this is when we saw the emergence of Metaplanet, which is obviously a publicly traded company in Japan. Give us the breakdown of why or how Metaplanet became this big. If we leave out the miners, they are actually one of the larger Bitcoin treasury companies as well. And why it is so important, because there is, I think, also, again, this jurisdictional aspect to it as to why Metaplanet then also took off on the Japanese stock exchange.
I can only speculate because I'm not an expert on the Japanese jurisdiction or the Japanese market, but they were a very close smart follower. And when you look at especially tech, in the tech sector, usually the guy that is on the forefront is losing the game to the smart followers that don't do all the mistakes, and they have a little bit of a better or neater setup, and they know what you need to look out for. So I think they were they were a smart follower with conviction plus a very strong underlying business. It's not, I mean, strategy's underlying business is, it's so-so. It's almost a zombie company. I mean, he's treading water, and that he also said that in a few interviews that the SaaS company, he was thinking years after years how to make it better, how to be better, how to, get close the gap to the real big ones, just above him, and he just couldn't. But then on the Metaplanet side, I think they have a strong underlying business. But again, I haven't really looked that deep into their books.
Yeah, and I think what's interesting with Metaplanet is if you actually go into why should investors buy Metaplanet shares, which let's just call it a Bitcoin proxy. rather than actually owning proper Bitcoin, you actually stumble across a lot of tax laws in Japan where
Mm.
if you hold Bitcoin and you want to sell it, for example, you get penalized quite a lot. You lose like, oh, in some cases, over 50% of your capital gain. And if you buy a Japanese stock, regularly traded, you actually get a lot of more benefits. So I think this also added to the
Mhm.
fuel. But now comparing the two, does Metaplanet have different financial models on how to acquire fiat for Bitcoin? Or are they, as you said, that smart follower like strategy who just realized like, hey, we have an operating business that is fundamental and we can maybe squeeze a little bit more out of it?
I think it's a bit of both. So they will use more of their free cash flow to buy Bitcoin. They have more room than strategy has. And the second part is, and I actually forgot about this, the tax issue. And again, this plays into the jurisdictional differences of all these potential new Bitcoin treasury companies. Um, that will help them a lot to have the MNAV at a good premium for quite a long time compared to what strategy has in the US with their tax break now for digital assets being quite clear, and there is no real upside added to this. So to me, in terms of engineering the balance sheet, they don't need to do anything different. They can just run it the way they run it for the time being. They have the same problem for phase three. They need to figure out how to use that capital that it's yielding something additionally, especially if they, and I don't know what their plan is. They were never vocal about it. Do they really want to become a fully fledged Bitcoin treasury company and abandon the operating business, or do they just try to tread along and juggle both balls? I don't know.
Yeah, I think you gave me a good keyword then for the next topic, but I think the main thing was at one point they said the max they want to go for is 210,000 Bitcoin,
Hmm.
which obviously would be the 1% mark of the network. So they have a, let's call it a lower risk parameter than, for example, Strategy has with the 10%. But at the same time, you keep reading the announcements and you keep seeing also the interviews of their CEO and of Dylan at Metaplanet who say they are still thinking about these next steps. But I would, now that is my guess, if they go for the third phase with the Bitcoin Bank, they would probably have more wiggle room in Japan as you still likely have the tax limitations to proper Bitcoin. And if people want to gain exposure and surely just use it on the fiat price, they would actually have, I think, simpler ways of offering additional services as a Bitcoin bank rather than what we see in Strategy and on other continents. But you said something very interesting. We now covered the first two Bitcoin treasury companies, and the playbook is very similar. You mentioned the MNAV. For anyone who has never heard of this, why does this keep coming up with treasury companies that we could then also use it for the next topic with everything that's happening after the top two companies? What is the significance behind it?
It's I think it's a very easy, not it's a dirty way, but an easy way for retail investors to understand where the stock price is trading, the market cap of the stock versus the total Bitcoin holding in fiat terms. Um, and it helps, or it's a barometer to to see as a retail guy from the outside. Oh, actually, the stock is trading. The Bitcoin value that's on the balance sheet is higher versus the market cap, so they can actually issue more stocks to buy Bitcoin at a discount. So that's the sort of the picture that the retail guy sees. Ooh, that there is more room to buy Bitcoin at a discount, even though if you go in and they do that, you get diluted, and the stock price, in theory, shouldn't just shoot up. But as long as they're buying more Bitcoin and that MNAV stays in check, it doesn't really move, or the stock price doesn't really show the dilution effect. But again, I said at the beginning, it's a dirty way of looking at it because in theory, and not in theory, in practice, you will need to look at the full balance sheet and see what's on there in terms of debt, in terms of how it's structured, to then see what the MNAV is and how clean that MNAV number really is.
Definitely, because I think once we saw the success of strategy and the success of Metaplanet, in, I would say, let's say March to May this year, we then suddenly saw the emergence of a lot of Bitcoin treasury companies, whether it be your Kindly MD or Nakamoto, how it's called, or whether it be companies like the Bitcoin Standard Company, 21 Capital, etc. Suddenly everyone was getting on the hype train. And whenever there is a hype train, it feels like, we may be overhyping, over-diluting this plan. And you then saw a lot of that, like, oh, our plan is once the company is set up, if MNAV is X, Y, and Z, we might sell, we might buy more. And you suddenly saw all of these companies that were just acquiring other companies, doing the same as strategy did, but in a much, much shorter time period. And suddenly you had a vast selection of a lot of companies, especially in the US. And then you suddenly see now the reality a couple of months later, where a lot of these companies are not doing so well. How do you feel about all of these companies emerging, and what are the risks with it?
Yeah. So you said, okay, there is a hype, and a hype is sometimes more a gut feel if you're close to the market and you see what's happening in terms of price movements. But if you can tie your hype gut feel with VC guys running around and playing the game, then you know it's a hype and it's a bubble. And this is what happened in the US. And we were quite close to that market. We also have advised some of the companies. The VC guys saw a potential trade that gives them a 10x within 6 months, which they don't have usually. VC guys block their money for years normally. So they all focused on this. Let's just spin up a digital asset treasury company. We buy a smaller cap token, or we use a smaller cap token for the treasury company. We hype up that token. They might even be VCs on their digital side for that project. So they might even have certain tokens they wanted to sell, but they couldn't without a hype. So now they have two exit streams. The company stock that gets hyped up due to the DAT bubble, and the token itself that moves at the very beginning when the DAT gets launched with whatever the treasury number is they would buy. Everything gets pumped up, and then it comes screaming down like every other TGE we have seen over the past 12 months. I mean, none of the token launches were successful as far as I can remember. I think that is now the check mark of your gut feel was right. This was a hype and it got overhyped, and now we're here sitting looking at treasury companies. Maybe about 100 I see on my monitor, and 90 are trading below, or the MNAV is trading below. So yeah.
Yeah, and I think the longer this holds on, and now I could come in with the Relai pitch as a self-custody Bitcoin company who does proper Bitcoin as you are holding it in your own wallet. You saw the conversions between it. These companies were overhyped. The stocks performed terribly. In some cases, I think we're close to like the 90% drawdown territory. And Bitcoin did the opposite, and the companies that actually did profit from it in terms of the treasury play are obviously companies such as Strategy, as the miners, and as Metaplanet, who also had their ups and downs, but in the end continued performing the way they're intended to. Do you see a future where it gets so ugly with these hype treasury companies that then one of the bigger ones steps in? Could this be like part 2.5 of the whole plan, where they would then acquire them? Or is this just the market will correct itself, the companies will have to sell their Bitcoin, potentially even close down, and the whole thing sort of starts again?
So two things. One is when you look at DATs, the only thing you need to look at is the team who runs the DAT. And then the second thing is who's the investor behind. So if the team is hired by the VC that is pumping the money in, then they will go for the short-term gains. And if it didn't work out, or if it worked out for them and they sold on the top and now the retail guy is holding the bag and is in the drawdown of 90%, then the management team, and this is where it gets really legally technical. So are they paid in shares, or are they incentivized in shares? Then they might not want to basically merge the company with a bigger one, because then they actually realize the loss of 90%, depending on where they can merge. So for this DATs, I have more hope that the management team is trying to turn it around, find ways of using the capital they acquired in Bitcoin to make it more productive and earn yield. And the stock price should reflect this. For other companies that really just played the short-term game, maybe the management team is already paid out in fiat or in other kind of terms, not in the shares. These ones are up for grabs. And I think it would make an awful lot of sense for Saylor to say, well, if I can buy this company that has 12,000 Bitcoins on their balance sheet and the Bitcoins are valued at a discount of whatever, 70%, let's have it, right? Just buy the company, dissolve the shares, put everything on the MicroStrategy, done. But again, I mean, who would do that runs such a company and give it away at a discount of 70%? If you sit on assets that are worth more than the market cap of your stocks, right? It's a bit like, it doesn't make a lot of sense. But you might find some of these teams that cashed out already and they don't really care where they sell.
It's a tricky question because we obviously never see the future and we don't know what's going to happen. But if you would need to allocate a certain percentage of all of these hype treasury companies, do you think a percentage of like 50% of them will exist in the next 2 to 3 years? Or is this just too much speculation to draw a number to it?
In percentage, I feel quite comfortable to give you a number. I think 95% of these companies will die. It's about 5% that make it into the third phase. Not saying that they reach the end goal at the third phase, but I see most of them failing.
Yeah, and I mean, for anyone listening now who goes like, oh, damn, like, isn't this bad? You do see this in the financial world quite often, whether it be with banks, with financial service institutions. They merge at one point, someone is a loser and others can bail them out, so to speak. And this is just a natural progression. And I think it also shows the maturity of Bitcoin. But with your job as the head of lending, and you mentioned it before that you also were involved in a lot of these companies, ever since the emergence of the Treasury playbook, how has your day-to-day shifted? Is it really also an interesting aspect where maybe small cap, medium cap companies come towards you and say like, hey, we've been looking at this and we're trying to find a way? Or has it just still been in the, I will call it now Bitcoin bubble, or overall in the crypto bubble, where the appeal was quite high?
It's the Sentora is not only running lending or structured credit programs. What we also do on the other side is DeFi investment vaults. So we're a vault curator and a risk curator for pretty much any vaults in terms of protocol vaults, but also in terms of we call them DeFi vaults, where smart contracts run underneath and various strategies try to generate yield. Now, these DATs are engaging with us. The ones that are a bit smarter in terms of I need to do something with my capital. And now let's just put the Bitcoin ones away. They're different to me, but every other DAT company needs to put their capital at work, and they want it in DeFi. It doesn't make sense to them to sort of bridge it back out into TradFi and try to lend or try to buy bonds to get some yield on it. They want it in DeFi. So our Vault Curation program has seen a lot of interest from these treasury companies to see what can we do, what's the capacity we're able to offer them, because they usually come in 50 to 100 mil clips or even bigger. So you can't just say, oh, let's just put it into Aave, or let's just go into a very small protocol and you're going to be the biggest whale in there. So that's now the phase where we are. And to me, this is the phase 2 for the non-Bitcoin treasury companies that find clever ways in leveraging their digital assets, their digital capital to generate more yield. And usually generate yield in the asset. So they want to run ETH strategies to earn more ETH and put it back on the balance sheet, and ease a bit the financing and acquisition costs they have.
Interesting, because I think it has its net benefits in whether it be in Bitcoin or in other digital assets who do start to realize this. And one aspect that we kept hearing around December is, well, the Treasury playbook for strategy has worked, so surely, Max 7 companies or just larger companies in the S&P 500 would follow that. What's your take on that matter? Will we see in the next 4 years one of these larger companies, let's exclude Tesla and all of these that already have it, that also will allocate? Because for them, I feel like they have such a large cash position. Let's think of something like Apple, for example. Mm-hmm. They don't really need the performance from Bitcoin, or they don't need the boost. But nevertheless, if you look at this from a financial model, you go, it's interesting that it would potentially even work with like a 1, 2, maybe 3% allocation. Is this going to happen in the second phase now, or could this potentially also be one of the servicing possibilities Bitcoin banks could offer in the future?
Mm-hmm. Do you remember the voting of Microsoft, their board voting? And it was Bitcoin treasury allocation got crushed. Like they had no freaking interest to do that. If I try to put myself into the shoes of the CFO of these really large companies, and when I look at my to-do list, what I'm the treasurer, what I'm supposed to do. I'm supposed to make sure I'm not losing the working capital. I need to steer liquidity where it's needed. It's depending on paying salaries or investing into factories or whatever. And the third part is whatever I have left to invest is either invested in and that's what they usually do, invested in competitors. So if they do a lot better than I do, then at least I gain some on my treasury holdings I have with them. And then that's sort of my key responsibility. So now someone comes and says, I think we should own some of this digital asset, that Bitcoin thing here. Don't you think it would make sense to have it as well on the balance sheet? And as you said, maybe it's just a very small portion, but it makes everything so much more difficult for me as the treasurer or the CFO. Do I really want to go down that road? Maybe not, but maybe the next generation of treasurers and CFOs, but the ones that are now in the 50s or 55 years old, I see the hesitation why they don't move. And maybe the last part is all of my treasury assets I have as Apple or as Microsoft, I can use to leverage in TradFi to either get more credit lines, have any sort of interaction with the financial markets I need to. Having Bitcoin on the balance sheet is just, it's a dead asset for them. Really, it is. There's nothing they can do with it. They can barely draw a fiat credit line as Bitcoin with collateral. So I think we're a little early, and maybe that phase two is way longer than what we think, and then phase three is when my kids are in the 40s or 50s. I don't know.
Yeah, it could be the typical meme we see, like, Dad, what did you do when Bitcoin was at X?
Yeah.
And you go like, well, I said in interviews and talked about the future. But speaking of the future, Patrick, you now mentioned this phase could be longer. We talked about the third phase, potential Bitcoin banks on the horizon, especially to the treasury companies. What do you see in like the next 18 to 24 months happening there?
I think we will see a lot of actions in putting your capital at work. So I see and here is the Sentora pitch, I see a lot of business coming our way that we can start to offer them strategies in the DeFi sector to earn yield on their assets. I think that's what we're going to see 18 to 24 months.
Perfect. And so it will also expand to other assets, of course, as you mentioned, because you also have you have the perfect data, you have the hands-on data, and you can see what is happening.
I think Bitcoin is the most difficult asset. And when I look at our capacity board, it's even though it's the biggest asset in market cap, but the DeFi sector, the yield generation sector is quite small for Bitcoin. And again, the type of Bitcoin sort of people, they don't want to have this wrapped, bridged, or anything else with it. And then it gets even smaller. But there is one part which people seem to blend out or not mention. It's the insurance or reinsurance sector. And Sentora is there as well, fighting at the forefront. Risk capital is needed in that in that sector, and Bitcoin can be risk capital to underwrite insurance or reinsurance policies. You don't need to wrap it. You don't need to put it into a DeFi protocol. You can keep it at a segregated or qualified custodian, and the reinsurance company, depending how they set up, they can basically draw a LTV on that Bitcoin to underwrite policies that yield between 6 and 8%, which is not bad to get a yield on Bitcoin by not wrapping or bridging your Bitcoin somewhere into the DeFi sector.
Yeah, and for any of the maxi-pads listening and now freaking out, if a company does this, it is just playing the fiat game. I think this cannot be said more than enough, because we mentioned now these different phases, and obviously, as you pointed out earlier with the strategy example, he is attracting capital from these sectors into Bitcoin, or a proxy to Bitcoin, let's call it. So naturally, other companies will also look for a same way to play that fiat game, because as you mentioned, not every company has a cash reserve as Apple does. They need to pay salaries, they need to get credit lines, and they need capital to actually get the business going and continue to get going. So for any maxi pads, like, don't take an offense here. This was all just part of what comes out of this. But Patrick, for you personally as well, what does for you the future hold? And if people are interested in getting to know you, getting to speak to you, where can they find you online?
I think we're still early. We're still early. When I talk to young people, like what I did last week at the gymnasium in Zurich here, they're very, very far away from the traditional financial system and knowing what it does, and even further away from what their potential option is to hedge themselves against what's coming. So I think we're early in that sense that there is still 1 or 2 generations to come that need to have a better base knowledge about Bitcoin. So I see myself do more educational purposes, being out there, talking about what my opinions are, to engage with people that have counter arguments, to just engaging and create content in a way that other people can start to read it and build their own belief. It's not we both believe in it, but we don't know if we're right. But that's just the way it is. And I think with what I see in the market, with gold above 4,000, with governments falling apart like in France, with central banks, some of the central banks making comments about the inflation target is maybe not that sticky. Maybe we drop it or we skip the tone. I think that train, and Lynn Alden always says it, nothing is stopping that train, and I think it will rather accelerate than it slows down. So seeing this, educating people, and hoping that people see the same in terms of prices, and then act on it. That's what I probably gonna do in the next few years.
Yeah, and I think what's interesting to see is I recently had a discussion with a gentleman on LinkedIn. Did the whole CFA, MBA, whatever stuff, and when I posted about, fiat system is not in good shape if you see the amounts of gold that's actually being bought, and it was a screenshot out of the report from the Deutsche Bank, so, it's a legitimate source, like often you get the, where do you have it from? Mm-hmm. He was like, oh no, it's working perfectly as intended, like everything goes up, debt goes up. We lower the rates, like nothing's going to happen. It seems like we've learned nothing from, let's call it, the last 6 crises we had, but thank God for Bitcoin. And I couldn't let you go, Patrick, without the final question we usually ask on the on the Relay Bitcoin podcast. You don't have to answer it in ultimate terms. You can answer it in percentages or just things like plenty. You being convinced in Bitcoin, what is your liquid holding also there? And do you feel comfortable with what you have, or is there always room to get more Bitcoin?
I have a lot of my net worth is in cryptocurrencies, and there is not a lot more room to buy more, to be honest, but there is room to shift more into Bitcoin. I was like 5 years ago, I was very big in altcoins. I did a lot of trading and farming and juggling around, and I lost a lot of money on these altcoins versus Bitcoin. And I'm now older, wiser. So my thinking is always about moving more of my non-Bitcoin exposure into Bitcoin. And at the moment, I feel it makes sense to move more into Bitcoin. I think we're not at the top right now. The blow off top has still to come, and then you want to be, obviously before that you want to be already in Bitcoin, but when it happens, you definitely want to be in Bitcoin and in not of any of the other assets, because the blow off tops will hit hard everything else below Bitcoin. So that's kind of my my strategic thinking right now.
Perfect. I think we could go on with the conversation forever, because there's also so much details, and we'll definitely have you back on once the plan further evolves with the Treasury company. But if people want to hit you up, what is the best place? Is it LinkedIn? Is it on your website? Please tell us where.
It's LinkedIn. LinkedIn is the easiest.
Nice, perfect. So we'll make sure to link Patrick's profile in the show descriptions. Patrick, thanks a lot for coming on and giving us the deep dive. And also thanks to our lovely listeners. Hey, this is Joël again from the Relai team. First of all, thanks for listening or watching to the podcast. We really appreciate your help here. If you want to actually help us out further, you can leave us a 5-star review in the Apple Podcasting Store, in Spotify, on YouTube, or wherever you listen to podcasts, because this way we'll actually reach more people with this fantastic content. And I'll see you in the next one.